Welcome everyone back to another Market Talk. Today we have Jeffrey Kalafut, my business partner, Joe Valente from Tabachak Law, and Kevin Dolan from Mac Home Mortgage. Welcome, fellas.
What's going
Welcome,
on?
welcome. Good
All
afternoon.
right. So let's get down to business. There's been a lot of changes in the industry, a lot of changes in the market, but let's start with mortgages. Kevin, can you kind of give us what's going on? And there has been a little decrease lately. So
Yeah,
what's that all about?
I just fixed my hair because I just got off the roller coaster ride of mortgage rates.
Yeah.
But yeah, no, this one is actually a little bit more favorable. I think the last time I was on your guys' show here, it was the same. If I think back, there was so maybe if you just we do this every week, we could lower rates.
Yeah,
No,
perfect.
but in all honesty, there's something called the jobs report, the BLS jobs report. It is definitely one of the major influencers in mortgage rates, and it comes out the first Friday of every month. And so last Friday was the first Friday in August, and so that really showed that the market and the economy is slowing, right? And so it's showing cooler labor numbers, right? So less jobs created. It's showing unemployment increasing. And so as many would hear that, it's not a really good thing. But when the economy is slowing, that is one way for, the Fed to see that, rates really should be reduced. And that's kind of going to aid in the lowering of inflation. And so that's sort of how interest rates are moving is will follow inflation, right?
Mhm.
So the Fed has a target of 2%. The Fed had meetings last week, and there was not a Fed or a rate cut in that meeting. There was not a rate cut expected to be in that meeting either. But there is now a pretty good shot that we see that first rate cut in September. And so that has pretty much been a solid statement at this point that will be the first rate cut. And so the market's like that, right? That's the interest rates for mortgages react favorably to that. And so we probably saw our single most rate reduction day that we have in at least over a year or two. There's probably an actual stat to that, but in my recollection, it's definitely in some time. We had a market rally up to the jobs report. So what that means is that rates had improved all week based off the heels of those Fed meetings and sort of the optimism of a rate cut in September. And then the jobs report numbers really just kind of put a nail on the coffin. So we had a really, really favorable week for interest rates. Can give you some averages, right?
Sure.
The average 30-year fixed rate for a well-qualified person. And the national average is one thing I take for what that's worth is that they don't take into account somebody who's paying more fees than somebody else to maybe get that rate. So it is a general average, but rates really now are in the mid sixes for most people. And that is a really good place to be in. And in a 15-year mortgage, you could even break 6%. We locked a few loans last week in the fives. So it's pretty favorable.
Interesting. Wow. So the good question too is like, as these rates drop, how many more buyers are going to get off the bench and jump into the market as well?
Yeah, so it's an interesting question. There's a lot of buyers who now are coming in hot and heavy because they were just sort of waiting for the six and the ability to maybe see a five at the end of the tunnel, and home sellers too, right? I mean, if you
Yeah.
think about home sellers, the average inventory issue is based on sellers not wanting to lose a rate that they have on their current mortgage that's very low. So, as we get this needle kind of moving back down into, the sixes and the fives, you'll see a lot of sellers come out too.
Yeah. Um, yeah, it's gonna be interesting because also we're seeing depreciation in some of the markets around the United States, for instance, Florida and stuff like that over the last couple of weeks. Since 2020, I mean, some of the Florida markets have appreciated by 50% on some of the home value appreciations. Today, right now, they're dropped around 5% appreciation on home value. But still, I mean, overall from 2020 to now, that's still like 45%. It's a slowing appreciation, but it hasn't, dropped down to, 2020 numbers. So, it could give people a chance to actually buy. But then also, if we see mortgage rates start dropping, will that start to increase appreciation rate again of homes because now there's more buyers in the market? So I don't know. It's a ebb and flow for sure. That
Yeah.
is for sure.
Yeah, no doubt about that. I mean, there's definitely affordability pickups, right? So, somebody sees a rate that they were pre-qualified for, say, even a few months ago in the mid sevens, and now they're in the mid sixes. That does fuel a fire of
Hmm.
their ability to participate in some of these bidding wars at a higher level. In just a general sense, they can afford more. But yeah, I mean, you have to imagine that the inventory issue is going to take longer to correct than the
Yeah.
amount of buyers coming in as fast as they will. And so the aggression in real estate is probably still going to be there.
Yep.
And you've been hearing it for months, right? A lot of people online, social media have been saying, well, when rates drop, brings more buyers, brings more aggression. Home prices will obviously go up because of that. And I
Hmm.
think we'll probably see a little blip there in the truth of that for sure in the short term.
Yeah, for sure. Jeff, what are you seeing in the market today locally, and what are some of the hurdles in transactions that you're seeing as well?
Well, I mean, overall, I think we're seeing a slight bump up in inventory, a slight,
Hmm.
markets where we would have 20 homes in the market. Now you have like 29 or 30, right?
Hmm.
Which is a decent difference when you're talking those numbers, but historically we're really, really low still. So it really comes down to just crafting the best offers for your buyers, educating them on what's going on in the markets, how to craft the strongest package to deliver to that seller to make them stand out above the rest.
Hmm.
Um, Challenge wise, I mean, we were talking earlier. I have one of our deals right now. Um, you know, Communication on both sides has been lacking, to say the least, and looks like the loan might be falling apart, which we're seeing. I mean, we're seeing that. Like it's
Yeah.
you're seeing stuff come to the table, and like we're saying, like there's unemployment rates going up, there's job loss that's happening here and there. So people that were once qualified a month ago now are not no longer.
Yeah.
So it's just I feel like there's more problem transactions in the past 6 months than the previous 6 months. There's nothing lately that's really been kind of smooth sailing all the way through.
Hmm.
They're very few and far between right now. So when you do get those, they're a great thing.
You're like, what? Wait, what just happened?
Yeah.
We
How
just
did I
closed?
just close that in 30 days? That was
Yeah.
incredible. Wait, we're not going to delay another 6 months?
Right. But you don't want a $100,000 inspection request
Yeah,
repair?
right,
What are you talking
right.
about? So
Well, we had almost one
it's
of those, but I gotta
yeah.
say, Joe helped a lot on that one. Where the initial requests, is this a kill letter?
Yeah.
Is this your way of writing a kill letter, or do you really want the house and you're just misguided on the other end?
Yeah.
People are trying different things to see how far they can go. That's for sure.
Yeah. And we've definitely, obviously in New Jersey alone, August 1st, we had a lot of different regulation changes that we're still trying to, work through the paperwork on that and the forms and how to articulate that to the clients and what does that look like? How does that change the game?
Right.
So,
Everything
and
has
that
changed. Every
everything's
one of the
changing.
forms that we have to review with clients is now changed.
Yep. Everything. So the real estate professionals are, these were kind of like shotgun to us a little bit earlier than the national implementation of these were changes because national implementation is August 17th. We
Right.
got it on the first, and even some of the documents aren't even up to par yet. So it's kind of touch and go. Us digesting that information and then being able to relay that information to the consumer is really important. So more education coming down the line for
Oh
sure.
yeah.
Joe, what are you seeing? Obviously, transactions are battles right now, but New Jersey, New York, what are some of the things that you're seeing?
Uh, yeah, I mean, touching on a little bit of what Jeff mentioned as well. It's you don't have like your every transaction has its problems right now. There's not a lot that's very simple. Inspection requests are minimal. The loan commitment is like flawless. There's just a lot of struggles right now.
Hmm.
Um, I do think the inventory there definitely was an uptick. Not a huge one like Jeff said, but when you're talking about low numbers, 50% inventory boost from like 20 to 30, it's a big number. It's just a lot lower than we're used to seeing customarily, right?
Yeah.
So, I think the combination of the mortgage, not just bringing in more buyers, but bringing more sellers to the pool, right?
Mhm.
So I think narrowing the gap between the seller's current mortgage and what they can get into in a new house is really the important factor here. So if we can get those, if those loans can dip low sixes, touch on the fives, like Kevin said, on a, on a 15 year, you can get a 5.5. Now you're narrowing the gap of where that seller's current mortgage is and what they can get, and now they're not so scared to say, okay, let's get out and do this. We've been waiting to do this for a couple of years. The only thing holding them back is, they don't want to get out of a 3% into a 7%. So it's
Yeah.
all about narrowing the gap, I think, of that seller more so than the buyer. I think the buyers are always there.
Yeah.
I think the buyer pool is going to be there for the next 2 to 3 years without question. You got
Yep.
to get more sellers to the table.
It's
I
going to
agree
take
with
a
that.
drastic change for that to even out
Yeah, it's
in
gonna
our
it's gonna take
markets, at least in our market.
right. It's gonna take something that, again, we've talked about this on other uh, versions of this podcast, whatever you want to call it. It's going to take something that we're not even contemplating
Right.
at the moment, right? Something that's unforeseen to the picture, I think. But
A
the
black
current,
swan, a black swan event.
yeah, exactly. Like the current market tool, I'd say in New York. New York's been an interesting market too in the city. The outer boroughs of New York experience the same problems as Jersey with inventory. So like your Long Island's, Westchesters, they're New Jersey for all intents and purposes. New York City has been a little bit slower than lately, and what's the reason for that? Usually the New York market's a little bit ahead of everything. So I don't
Mhm.
like saying that that's a little bit slower right now, and hopefully that doesn't correlate to New Jersey, but it's not much slower. It's just a little bit slower than customarily.
And do you think it's because, some of the sellers were reaching for, higher list price, so people are kind of balking at that list price these days?
Sure, I definitely think it's like, sellers a little hesitant to sell, or it's on the market, but they're not getting the number that they think they should be getting.
Yeah.
So that, yeah, New Jersey's definitely seen a little bit of a shift in that. You still have crazy offers over asking, but it's slightly shifting from a major seller market to, I don't know, slightly downtrend towards buyer. It's still seller friendly, but
Oh yeah.
Yeah, I think
and
it's seller.
those trends are definitely coming down a little bit in terms of, it was just the seller's market, but it's going to be a seller's market for a while in Jersey.
Yeah. I mean, I don't know about what you're seeing, Jeff, but I haven't seen too many crazy offers over asking just in the last couple of weeks. But
It's
yeah,
it's
it's still
been kind
happening.
of, I don't want to say what the norm was, that you're not getting that wild card as much right now. Like I always
Mhm.
say, like, a lot of times you'll have 15, 20 offers in front of you, and they're all kind of the same,
Right.
right? They're 15, 20, 30, 40, 50 over asking depending on the price point. And then you
Mhm.
get that one that's like 100 over and you're like, "Whoa, okay. They didn't have to do this, but this is pretty cool."
Yeah.
I think the buyers, and I think they're more in tune with what's going on. I mean, I have buyers myself that ask me what's the averages right now in that town we're making offers on. So I'm
Mhm.
pulling stats and running numbers like, okay, based on the offers in this town that I've closed, we're at 103% on average. We'll bump that up another 2% to really try to, seal the deal. It's, they want the home, but they don't want to
Mhm.
give away a kidney to get it either. you
Yeah.
know?
Yeah. I'm also seeing that some of the houses on the market that need a lot of help that 6 months ago were getting sucked up. Doesn't matter. They didn't care.
Yeah.
Like didn't care how bad the condition was. People are slowing down on that. They're pausing on just, sucking anything up on the market.
Right. It's
So
that. And it's really, I think we've said this all along, but like geographically speaking, there's certain towns in our market that homes are sitting a lot longer now.
mm,
Whereas a year ago, they were gone in a heartbeat. So the pricing, especially in some of those markets, is going to be really critical. And I think the sellers have to kind of, hopefully they're being guided by the right people,
mhm.
with their pricing strategy. Because when you're looking, like there's parts of Sussex County right now that, there's 40, 50 homes on a market in different towns
Yep.
that had
Right.
15, 20, and they're
Yep.
sitting there for 30, 40, 50, 60 days now.
Yeah.
So when that starts happening in those markets, you got to get ahead of that curve. You're way behind at
Yep.
that point. You have to
Yep.
make those adjustments, and hopefully, again, I think it might be a case of the sellers thinking their home is worth more because of the way things were, and
Hmm.
they're trending downward in those areas, and people aren't gonna, there's a limit again. Just like when COVID hit, like people like would move west, but they would stop a certain point. Then they'd sort of push a little further again and open those markets up a little bit more. And now they're pulling those reins back and they're going more east again. So
Hmm.
it's going to be an interesting dynamic to see how geographically speaking, how these trends continue.
Yeah. It's definitely a town by town, county by county basis right now, for sure.
Absolutely.
Especially in
Yeah, Jeff makes a good point too about things are just moving a little bit slower in terms of your house going on the market. There was a good period for about 6 months, starting in like February, March, up until recently, where especially in Essex County, you get a house on the market, you know, 3 days later that weekend, you have a billion offers, and you're into contract within a week.
Yep.
Right.
And that's slowing down big time for sure.
Yeah. I mean, I can't tell you how many times I saw like, in Essex County and, a little further east that as soon as they listed the house,
Yep.
it already had the set date and
Correct.
time when all the offers needed to be put in. So
Right.
it was listed and highest and best was set at the same time. So
I was seeing that in areas out here. There are a few homes in Mount Olive. Like, come on.
yeah.
It's like people haven't even seen the pictures yet.
Right.
Highest and best.
Yeah. It's on today, and highest and best is due at 3:00. So yeah, it's a little crazy, but yeah, it's definitely things are moving and shaking. But yeah, we'll see how many buyers get off the bench with the rates dropping and also predicted to drop a little bit. Kev, what do you recommend for people right now, for buyers right now? Should they lock their rate right now or hold out, or what's your opinion on that?
So the opinion is always to, kind of rate yourself on a scale of conservative to aggressive, and how much risk you're willing to take with that, right? If it's going to keep you up at night and you're going to, drive yourself crazy over it, and you're not willing to, lose 1/4% from the market worsening to gain maybe that 1/8 or 1/4%, then when you feel that there's a reasonable interest rate provided by the lender to you, you should lock it and secure it and make sure that you can just move forward with the transaction and not have that be a part of your life anymore. However, there are, moving parts to that, right? And there's also something else to take into account is how far away your closing date really is, right? And so if you're closing between now and the end of August, we just got a massive improvement. Take that gain, lock it, and move forward. I wouldn't. You can see in the world markets today and our stock market. I mean, you go from I use the analogy, the roller coaster ride. I mean, Friday was high fives, and then this morning, we wake up to that, and it's like that's how quick these things happen sometimes, and it's just you don't want to have a situation where you say, wow, I could have got that last week and now I don't anymore, right? And so there is still volatility. Interest rates are trending lower, and that's off the heels of inflation going down, and we're going to follow that. In fact, on the 14th of August is the next CPI, right? That's the next reading of inflation. That's the Federal Reserve's favorite measurement of inflation. And so that's been driving, these recent decreases. However, if you're closing at the end of October, there is the jobs report and CPI readings that come out every month. And so you've got 2 more months of that to take place. So there's 4 more economic reportings, if you will, that can make rates move more favorably. I think it's also a good idea to check with your lender and understand what their float down options are. That's a term that will probably come back into the market because there is a certain duration of improvement that has to take place from where you initially locked your rate to where the current market improvements need to reach for the lender to be able to execute that. In fact, we had a client this morning, Jeff and I, who was looking at it, and we were able to do that for him. And he's closing tomorrow. So it's policies like that and lenders that are out there that will give some flexibility to those things, and others that have a harder line in the sand with it. And it's kind of like when you lock your rate, you lock your rate. But I would say, being in my industry and in that sense, is when you lock, you should put it to bed. You shouldn't expect those things to happen either, right? It's not like you're going to lock your rate. You're protected from all the market movements that could worsen the rate. You're really not in a position most of the time to get better. What happened Friday did possibly do that for some folks, but so you also have to be taking the advice of a trusted lender who's going to tell you what is coming down the pike between when they take your application and your closing date. And I think you have to make a really educated decision for yourself. But ultimately, it comes down to anything: risk, right? Are you conservative or are you aggressive? Are you rolling the dice, or are you just want to sleep at night knowing that you're secure at a rate? And there's different people for that handle those things differently. But if the rate's good and it's been down almost a point from in the last few months, lock it is always my advice.
Right. Especially because nothing really travels in a straight line either.
No.
So it can, here and there bump up, but yeah, if you want to have, some sleep at night, maybe lock it up. So, but great, guys. Anything else anybody would like to add before we jump off today? Not all at once.
I think crickets, it is. Yeah, no, I mean, it's just, I think there's a lot of change in the industry. There's a lot of moving parts, more so than ever.
Yeah.
I'd say to everybody out there that does listen or watch, stay tuned, because Jay and I are definitely going to be introducing some new changes and policy changes in New Jersey that you're going to have to be on top of.
Yep.
And let us get our minds wrapped around them first, because things are changing. There's new type of agency agreements in New Jersey now, which I think is a very good thing. How buyers' commissions are being paid has changed, and we're gonna go more in depth on those things at another time. But stay tuned for that.
Awesome.
Yeah, I'd add that if you bought a home in the last 2 years, it's probably a good time to speak to the lender that you worked with, or another lender, to sort of come up with what we're calling the strike price. It's kind of like, where do you really need to be, right? People were talking about refinancing your mortgage the second that you closed at a rate that you felt was higher than you would have liked it to be. So where do you really need to be for that to make sense for a refinance? And keep in mind, we are predicting that there could be 2 floors of this, meaning the first floor being a refinance just to really kind of right size your mortgage, get you into a good lower rate and payment right now. But if the forecasts go to where they could, bottom out at rates in the high 4s, around 5, if some analysts are predicting rates getting to that point, but that's down the road a little bit, right? 2026 and beyond even. And so if that's the case, strategize on potentially looking at enjoying the decrease that you can get from a refinance today, and make sure the break even is reasonable and that your loan officer is going over all that with you. But keep in mind, there is possibly a second floor of refinancing that can come in a few years later that will present opportunities for people to do things like, lower your term of your mortgage, and there's some strategy to taking you from, getting you to a more comfortable place today. But then why not try to cut, 5, 10, 15 years off your mortgage? And that's the kind of set it and forget it transaction that could be there for people in the future. So make sure you're talking to your lender and make sure that, they're aligning, that strike price for you, and that they're doing the monitoring for you, so that it's not just in your head, and let them come to you with those opportunities.
Fantastic. Gentlemen, we appreciate the time that you guys spent today, and for the ever-changing real estate market, we'll continually share our insights and information. But yeah, we're gonna sign off for today, and thanks everyone for joining us.
Thanks, guys. Have a great
Until
day,
next time,
guys.
friends.
Take care.